Hello, welcome to AMFA2. Today we are going to discuss about unemployment, inflation, and how that is being controlled in a country. We take the example of United States of America, which is one of the most economic power in the world. In the last episode of AMFA2, we have discussed Ukraine-Russian war, how it is affecting the global economy, especially the manufacturing industry, which includes semiconductor, automobile, and also we have seen how the crude oil supply is going to get affected. The supply chain hassles and the demand increase has created a lot of havoc in various countries. Many countries has got a central bank system. In India, there's a reserve bank. In Europe, there is a central bank. Similarly, America has got Federal Reserve System. The specialty is this is a decentralized central bank. In 1913, the Act of Federal Reserve System was signed by then the President Woodrow Wilson. And the objective of the Federal Reserve System was to strengthen American banking system, address the concerns and issues arised during the crisis of pandemic, war, and natural calamities and many such issues. The present American inflation rate is 7.9%, which is one of the largest inflation rate countries facing after 1982. Let's see how the Federal Reserve System works and what are the different components of that and how it is going to control the various measures. The three major entities of Federal Reserve System are: number one, the Federal Board of Governors; number two, 12 Federal Reserve Banks, which are those 12 different districts is given in the list; third, the Federal Open Market Committee. The key objectives of Federal Reserve Systems, the functional objectives are: number one, the monetary policy creation. It addresses the unemployment, inflation, and instability and various issues and provide a proper solution for the country. And across all these 12 different districts of Federal Reserve Banks, they are independent bodies but acting under a common supervision. And second, first we said it's a monetary policy creation. Second one is ensuring a safe and secure banking institutions or financial institutions. Third is ensuring a proper settlement method way for the US dollar. Fourth is customer protection. Whoever is dependent on the financial institutions, what are their demands? What are their expectations? A proper research and analysis used to happen, and accordingly the policies are being made. Now the country is expecting around 25% of basic points increase in the interest rates to address the ongoing inflation rate. Let's see how it really works. We know that when the inflation is high, the meaning of inflation is the rates are very high, the purchase is difficult, the demand is more, but the supply is short. This situation calls for a control in the market. How it is being controlled is Federal Reserve System increases the interest rate, as I have mentioned. Borrowing rate of the banks under Federal Reserve System obviously comes down because the interest rates for borrowing is more. Have to increase the lending rate. So when the lending rates to the commercial banks are increased, ultimately the public who are going to borrow money from the bank has to pay more interest rate. Certainly, people going for new loans will come down. or the amount they are going to borrow come down. This certainly affect new projects, new product development, new activities like house construction and things like that. People's purchase power also comes down. So this brings down the demand rate, the high demand, and certainly the supply and demand almost gets balanced. So the inflation can be brought down to a control. On the other side, contrary, when the economy is on a slow pace, when unemployment is very severe, Federal Reserve slashes down the interest rate. Thereby, the banks under Federal Reserve can borrow more money, lend at a cheaper rate to the public. So when people are able to borrow more money at a lower interest rate, more people comes forward, borrow money and spend towards their business expansion, new projects, new products line, house construction and various other activities. They can spend more because they have more money with them. This creates new projects, means new employment. And the cash flow in the society, in the community is very vibrant and dynamic, and which triggers or which rejuvenates the economy, and thereby the crisis can be resolved. So these are the two methods, basic things by which Federal Reserve System is controlling any financial instability. So today's AMFA session was a small effort to give a familiarization about how Federal Reserve System works in US economy and how normally a central bank system controls inflation or unemployment, and what are the different stakeholders of the system, what are the different objectives of such mechanism. Certainly, you can read more, understand more from the briefing given in today's session, and hope to meet you again in another session of AMFA2. Thank you so much.